I hope everybody enjoyed the morning. I hope everybody enjoyed the lunch and attended Brooke's presentation. You know, Vietnam really is a special place, and we do appreciate everyone taking the time to spend with VinaCapital. So, you know, one of the things that we always want to do is we want to address controversies head on. We want to talk about the biggest issues and talk about the things where we get the most questions on. So within the public markets, banks are 39% of the index. If we think back to a couple of years ago, when there was a liquidity crisis, a lot of people were wondering what the health of the banks were like. So it makes a lot of sense that we spend 30 to 40 minutes today providing an outlook on banks and then answering any questions you have. So as I mentioned earlier, we'll have the app Slido, so if you put in any of the questions, the QR code, I have the iPad here, and then obviously we'll have the microphones going around. So let me just introduce my two panelists here who've been kind enough to join me. Hi, Pham from OCB is the CEO of OCB, and Thuy, who is our bank analyst at VinaCapital. So as Lin Vu was talking about the research process, Thuy is the one who leads our coverage of banks. So with that, Hai, the first really difficult question goes to you. You recently joined OCB as CEO. What is your background and kind of why did you come back?
Thank you, Eric. So good afternoon, everyone. Actually, for me, it's so difficult to join VinaCapital event. Right? This is my first opportunity to join VinaCapital event. And I recognize that the best way to join VinaCapital event is to join investing company of VinaCapital, and that's why I'm here. Right? But just as a background, so I have spent about 28 years with HSBC, both in HSBC Vietnam, as a CEO of HSBC Vietnam, and then moved to Canada to work for 4 years. Came back last year. First tryouts with a private equity platform, and then recognized that banking probably is still my comfort zone. Right? So joined OCB about 5 months ago. I would say that when I look at the banking sector, I think for the last 2 years, has been very, very difficult due to the SCB event, real estate sector, difficult state. But from my perspective, I think that's a great opportunity to join because when things are bad, right, the upside is a lot. I think you have a much higher probability to grow on the upside rather than on the downside, and that's why I see. And secondly, I think that there are a lot of things in the local bank, and I can say that local bank have their own competitive advantage. They have done a lot of great things for the last 10 years, but there's still many things that I think, like just from a person who worked for a foreign bank before, I believe that we can bring more value to the table. If we can help to raise the standard of the market, that's something I think I'm quite keen to work on as well.
And one more question before we go to Nguyen. So when you think about OCB, is there kind of a unique value proposition? Is there a specific segment of the market that historically OCB is focused on?
So even though the message we send out to the market that we are really a retail and SME bank, in very honest assessment, right? If I look at the book today, 70% of the book come from the large corp segment. It's not by design, probably more by accident. That many of the company that we supported them 10 years ago, they were very, very small. Right? So I can name some of them like Nam Long, Sun Kim, and they have grown up to become a much bigger player now, and they stay with us because we supported them during difficult time. So if I look at the book today, 70% are really from the large corp segment on the lending side. On the deposit side, 70% coming from the retail deposit. But the way I see OCB going forward is that I think there are 2 areas for us to grow, right? It's really for retail and SME. Because for large corp, there are a limited number of names that we can cover in the market, right? But for both for retail and SME, it's not easy to conquer the market. Many banks have tried, many have failed as well. And those who have done, I think those who have been aggressive in the retail sector, right, have been suffering for the last 3 years, right? You have seen so many names that really seeing a rising NPL. So, but I do see there's a lot of opportunity in those 2 segments. It's not well served in the market today, and obviously We have a few fintech companies in this room as well. So I think there are tech solutions that we really want to bring to the table. We do have a fintech company within OCB. We have Leo Bank. So for those of you who are young enough, right, you must have tried Leo Bank, who are really targeted at a very young segment. Right? So again, that's the idea, is that bring technology, bring data science to really cover the SME and also retail sector in a very more focused way, rather than like cover on a mass segment.
Thank you. And so Thuy, you cover banks for VinaCapital. What does your coverage universe look like?
I cover 14 banks, including 3 state-owned banks and 11 private banks. It accounts for 90% of the total market capital of all listed banks on the stock market.
Okay. And so last week, I read an internal research note from the team that was discussing your meetings with the State Bank of Vietnam and other ministries. What did you learn on that trip?
Before the trip, I was really confident about the outlook of the banking sector. And after the trip, I was even more confident about the outlook of the banking sector. In the trip, we have a discussion with the SPV, different departments, and also departments from other authorities, and the industry experts, and some of the state-owned banks. And we have a very strong impression that 2024, 2025, the rest of 2024 and 2025 would be a year full of support from the top, not only for the overall macroeconomy, but also for the banking sector. I don't want to take your time by repeating all of the supportive policy on the macro and the overall economies that Mike and Ms. Thu and Ms. Ling may have already mentioned already. But what I would like to add to that is that from we are much more confident about the SPV's will and commitment to support the liquidity of the bank and maintain the stability of the system. And this means that the policy rate will be kept stable, and we may even think of a scenario of a further cut if the condition allows the SPV to do so. And about the more market-driven rates, like deposit rate and interbank rate, we also are very confident that it would be kept stable or just a very slight increase that will not affect the accommodative level of the rest or the recovery of the macro, of the environment, of the economy. And I have to say that banks seems to be quite comfortable when hearing that, when reacting to the standpoint of the policymaker, because this will have improved their asset quality and margins. And I guess that you may all agree with me that a low rate would have alleviated the pressure on asset quality and also put the credit growth. But because you are from you are foreign investor, you may be a bit surprised when hearing that a low rate would benefit banks' margins. But I'm pretty sure that you may also double check with other bankers and also Enghai sitting here, that I believe that the banker would be very happy to hear that, to know that the rate is expected to be stable or even lower, because this will help them to maintain the current supportive lending rate without cutting too much on their margins, like what happened in 2023 and 2024. So I believe that the bank will find it's to be much more easy and relief to about the operational environment at least until the end of 2025. I forecast that the margin of the bank will improve by at least 10 basis points next year, and supporting the profit growth of about 19 to 20% per year.
So, and a question came up in the last panel, and I deferred it to this one, which was about maybe how long you think interest rates will stay where they are. You made a comment, you're looking kind of across the sector. You meet with the SPV, you look at it from the perspective as an analyst. When you meet the SPV, you look at it from the perspective of a bank CEO. What's your view on interest rates? And do you share Thuyan's view that if they stay low, it actually is margin improvement, not just about asset quality?
So I think that, so we met with the Prime Minister and the SPV governor, I think 2 weeks ago, right? During weekend. And then somehow the government only worked during weekend. During weekend, yeah. That's the Vietnamese way of working. But again, when I listen to, and actually we debate a lot about the government policy, I think for this year, right, you might notice that the central bank, in fact, work on the very thin borderline. So the first half of this year, right, actually they were in a very difficult position, because the Fed still kept very high interest rate. VND is under a lot of depreciation pressure as well. But the PM want the central bank to lower interest rate, right? So those are kind of put the central bank in a difficult position. Luckily now Fed starting the easing cycle, and that can give a lot of room to the central bank to start easing rate. So I said the same view with Nguyen, is that the rate will be eased further, not significantly, but it will be eased further. We don't have inflation issue in the country so far. But on the other hand, if you notice, right, and actually I said one of the VinaCapital people during lunch, is that for this year, on the monetary policy side, right, the central bank adopting a easing policy. But on the fiscal policy side, right, not by design, not by intention, but we are adopting a tightening fiscal policy at the moment. So on the fiscal collection, the government actually over-collect or overachieve in terms of tax revenue. But in terms of fiscal spending, we are underspent significantly, right? So technically, you are withdrawing more money from the circulation. There's a less money system. And that's why if you look at on the deposit rate, right, for bank, right, a lot of banks now competing for higher, they are willing to pay higher deposit rate just to be able to keep their customer deposit, right? And then on the other hand, for the interbank market, actually rates are going down, right? So you see a diversion of the two markets at the moment that, and then bank are, and also if you look at deposit growth for this year, I think roughly around like 3%, 4%. I don't have the exact number. Lending growth about 9%. So lending growth is growing much faster than deposit growth. And that explains why that banks are also scrambling now to try to retain the deposit, customer deposit, and they have to accept to willing to pay a high deposit rate. And that also reflects why bank margin is getting squeezed. Because on the lending side, you have to compete on the lending side to maintain a high credit growth. On the other hand, you have to pay higher for your deposit, right? So your margin gets squeezed as well. But overall, I think I said the same view that next year, our view is that things will get better with the real estate market recovery. Not significant recovery, but I think still a gradual recovery. With a lower interest rate, I think that should help bank to ease the pressure on the book as well. So overall, I think I would say that prudently optimistic, right, in terms of how we look at the market for next year.
Okay.
Yeah, I just want to add very shortly about the margin expansion of the bank, not only thanks to the ease pressure on the input rate, but also they can benefit from the recovery of the credit demand from other higher yielding segments like mortgage, consumption loan, and maybe infrastructure. So that it would be also a benefit factor for the bank's margin. And also the low rate would help them in the asset quality, and that's why I believe that the bank would be much more confident about the operation environment next year.
All right. So a question just came in already, so I'm bypassing the prep. You're welcome. Okay. How does regulation differ to Western banks? Example, Tier 1, Tier 2 capital ratios that need to be maintained.
Sorry, can you say again?
Sorry. How does regulation differ to Western banks? Example, Tier 1, Tier 2 capital ratios that need to be maintained. And maybe that goes to the Basel III.
Yeah, so the central banking has made it very clear. So we do have a credit growth quota in the market for, I know, probably for over 10, 15 years. And that always been the constraint for bank is that as a smaller bank, right, if you have the same credit growth quota as a percentage of your book, right, you're always lagging behind the bigger guy, right? Because each year you can grow, let's say 50% of a smaller base, then the absolute number is a lot smaller. So you getting smaller and smaller. Now I think it's to some extent, I would say central bank kind of adopt a new concept that they, as long as you have a strong credit, strong capital base, you have a healthy loan book. I think you adhere to certain criteria in terms of like compliant, being compliant. So those are the criteria that the central bank would then determine that then you have able to grow with a more flexible credit growth quota for this year. And I think going forward, the central bank will, I think, gradually remove the credit growth quota for good bank only, for Tier 1 bank. Their concept is that if you're a good player, right, then you have to follow Basel II. You have your own capital requirement as well, and that will put itself, I think, the constraint on how much you can grow your loan book. Right? But for tier 2 and tier 3 bank, I think that the central bank, they still want to control on those portfolio. And I would say that the biggest concern for a central bank today, and I spoke with them very often, their biggest concern is that what the data that you see today, sometimes is not the real data. And that makes the central bank in a very difficult position to decide how they should adopt their policy on the bank. Right? So unless you get what you see, then it's a lot easier to deal with the challenge or deal with the problem. Today, I think I don't generalize the market. I would say that the data transparency is still an issue in the market today. Right? So again, that's a challenge the central bank to deal with.
Not for OCB though.
I would say we're not 100% yet. We are getting there, right? So we still need to clean up the book, making sure that whatever number we have reflect the true reality of what we have. And I can be totally honest with you that we are still in the journey, but we are getting there. Right?
And from a banking sector perspective, or is Vietnam, what is the timeline for implementing Basel II or Basel III?
So are we in Basel II already?
Yep.
In reality, I would say that probably we are Basel 1.5 at this stage, right? So not really Basel 2. Again, going back to some of the principle about how do you recognize risk, how do you book provision for your loan book. I think we are still in the journey. Not yet Basel 2. Basel 3 is still a long way to go for us.
Thuy, we were talking during the lead up to this meeting about your trip in meeting with the regulators. When you heard kind of what you heard, as an analyst, what was your reaction? Kind of what did you do with that newfound information?
Yeah, the information that we, and the standpoint that we got from the SPV and other authorities is more positive than what we had anticipated before the trip. At least in the sense that the pressure on the interest rate would be less than what we expected before. And this means that the risks related to the banking sector, especially related to the possibility of monetary policy pivot, or the risk of slower than expected economic growth would be less than what we anticipated before. So we can be less worried than before about the risk, and we expect that the entire banking sector would benefit from this standpoint. But from that, I still would like to note that there is still a risk that are hanging there for the banking sector that are related to the real estate sector. Because the real estate sector is still pending with the zoning and approval issue that may take the relevant bank longer to collect their money from those kind of pending projects. Keeping that in mind, we're still sticking with our preference for the low risk, healthy, solid quality banks that I think would be able to capitalize on the recovery of the broader economy recovery. But however, in the other side of the banking sector, I also have a look back to the more higher risk, more aggressive bank in the past, and think that maybe it's still, because the risk of the sector is lower than before, maybe it's still a good idea to look at these higher risk bank, but in a more selective way, in the sense that if this bank can get out from the mess, can solve their current problem, or the legacy of that arise in the last 2 years, and this bank can get back to the competition of the banking sector, especially when we anticipate that the retail sector will recover next year. I believe that if they are able to get just themselves together and build up again their competitive advantage in the retail banking and get back to the competition, get back to the race, they will still be able to outperform in the market.
So this is not as simple that government supports by higher risk. It's still about really being selective because the stronger banks may get even stronger? Yeah. Okay. So hi, it's interesting because depending upon the statistics you look at, Vietnam in a weird way, is underbanked, meaning a lot of people still don't have access to kind of brick and mortar banks. But then at the same time, I would say the priority segment has 3 or 4 accounts, and they're almost overbanked in terms of the number of relationships they have. Knowing that, what is the growth strategy that you're employing to grow share? And is it a focus on client acquisition, or is it a focus on growing wallet share?
Yeah. Thank you for the question. So I think the first basic question we asked ourselves when I joined the bank 5 months ago is that why customer go to OCB? Because that's very important, right? To understand what makes us different from the market. So I would say that there are 2 reasons that people go to all this OCB today. One is that I would say that we are not a very sexy brand in the market, right? There are many other banks who are much more visible in the market. But probably people view OCB as a brand without a scandal, right? So pretty clean name, right, in the market that doesn't have any scandal, right? Obviously, we don't have a very high growth story so far, and that's what we are working on. But the second reason people come to us because of the tech platform. So if you look at the API, open API connection, right, I think we are one of the top 3 players in the market today. For all the big players in the market who have the highest demand in terms of API connection, we are there, and we deliver what customer want. So that's for the first part. But the second part in terms of how do we scale from here, right? I would say that in the past OCB, I think we try to build everything at a very early stage. So even I talk about OPI, I talk about open API, I talk about like Basel II. There are many things we implemented first in the market, but then we don't commercialize that. We don't have a strategy to how do we scale from there, right? A few things we are working on at the moment. So firstly, for the SME sector, for example, we are covering SME client as we cover last corp. So we go to SME client, we get their credit information, we process their loan application. So it takes almost the same amount of time as a last corp, right? And obviously it's loss-making strategy, right? Because like it's very small size business, and then you spend the same amount of time, effort. So we're moving into a program lending at the moment. Basically, there's kind of a scorecard, and it's pre-approved limit as long as the client meets certain criteria. And instead the team had to go on the street to knock on like 10,000 SME door, right? We only knock on 1,000, right, SME. But we know exactly what they want, and we know exactly what we have to offer. So that's for SME. Right? The second area for retail banking. I think we also recognize one thing we learned as well is that people talk a lot about digital banking, right? But at the end of the day, right, the segment that really generate revenue or profit for the bank is really the wealthy segment. Yes, you can talk about a few million clients, but at the end of the day, it's really the affluent segment. Is that where the bank make money, right? And for the affluent segment, they still need branches. They still want to go to a branch to talk to somebody who can advise them on banking, on investment, on insurance. So again, the idea is that instead of trying to catch all the fish in the market, right, we just want to focus on where we believe that we have competitive advantage, especially for the affluent and also the upper mass, because where we believe that we have a pretty good portfolio at the moment. But if I look at the product penetration per customer in OCB, is still very, very low today. So it's a 1.2 product per customer. And then from my point of view, I think that for any normal banking services, right, easily we can hit 2 or 3 products, right? So again, it's about not only about the account, but getting them doing like insurance, like FX, investment, so credit card as well. So there's a lot more upside in the portfolio that we could do today, right? So again, I think it's coming about understanding what segment we want to focus on and making sure we can monetize on the segment and using the data we have with our client at the moment.
In order to accomplish that, is that more about strategy? Does that need to be kind of a cultural or an educational process for the staff? Because they may think 1.2 is fantastic. Exactly. Yeah. How do you actually implement something, and how long do you think, I'm sure you have an internal target. Yeah. Is it education focused? Is it client focused? How do you get there? So we are in the final stage of getting the strategy paper to be approved by the board. Next step will be really go to the market to articulate our story in terms of what we want to work on. Internal communication for me, I think even more critical is that making sure everyone in the bank share the same view, right? And again, probably make it very succinct so then the whole strategy actually should be able to be
explain in one place, right? So make it simple so everyone knows exactly what we are working on. So my view is that it will take us probably about 3-month journey to like articulate our story to the market, also for internal communication as well. I think strategy implementation also, I think, will be another challenge as well, right? Making sure we have about 7,000 people, making sure everyone knows exactly what they have to do to get there, right, in terms of the strategy objective. And the last thing I think is something we are working on is the culture. I think they're saying that culture eats strategy for breakfast, right? So building a compliant culture in the bank, making sure that people understand like what is the right thing to do, right? And do it in the right way. For me, I think it's very, very critical because to manage a bank with 7,000 people with 170 branches, right? If you only rely on control process system, right, it's impossible to control. So again, how to build that kind of culture so that people know what they have to do. I think for me is to make it the bank become much more sustainable going forward.
Thank you. Okay, Thuy, let me see here. Actually, I was going to ask you this, but we'll go to Thuy. So one of the things we were talking about is there's a lot of great things we've talked about. What actually could go wrong for banks? So you just talked about all the support, that's great. What's the not the bear case for banks, but what are the things that you're saying, if this happens, what's the risk?
Yes, actually I have mentioned a little bit, touched a bit about what could go wrong for the bank, the risk for the bank, mainly revolving the real estate risk. Because when we expect that the overall economy will recover, the real estate sector recovery may be uneven because they are still subject to the zoning and approval issue, and some of the project is still pending. And because they are pertaining to certain banks, there are certain banks that are still getting distraction from the real estate difficulties. So that I believe would be something that we need to watch closely to see what is the turning point for this project and for this bank. But I would still look at the ability of this bank to handle those issues. At the same time, getting back to the market of the recovery of the retail segment and continue to move forward and compete in the retail segment. And that would be another factor that I consider to see whether this bank would still have a chance to outperform the market.
And how about you? I mean, you think about it just from a singular perspective, probably.
So I say a view that I think the real estate sector probably the biggest.
No, hold on. The real estate panel is next. So just to be clear, they'll be talking after you. So be nice. Okay. Yeah.
So again, I think it's the key driver of the economy. If you look at most bank exposure today is still to real estate sector, right? But if I look at it as a fundamental issue for the bank today, I think there's a few things. One is the corporate governance. So there's still not a clear line between ownership of the bank and management of the bank, right? And that, I think that's something that we need to get sorted out in the future. So then making sure that management team run the bank, right? Not the owner run the bank, right? Because sometimes I think the owner run the bank is no issue, but if the owner run the bank and use the bank to fund his own business, then it's a problem, right? Because you don't adopt the standard that you adopt for other clients. Second thing is that I think I'm talking about the single exposure limit for customers. So there's a limit for buying exposure to one entity and to the group. That's still an issue today in the system. There is that it still need to be, I would say, consolidated and recognize the true exposure. Because
are you talking related parties or just anybody?
No, anybody, right?
Okay.
And again, my view is that there's a reason for the limit, right? That if you expose to a certain group which have very big exposure, if that group go down tomorrow, then you are at risk, right? So again, I think that principle need to be adhered as well to make sure that buying prudently manage the risk. I know that during difficult time, right, you want to own your act into a good player, right? But that good player might be at risk as well. So again, making sure that we manage risk prudently. So those are the two, I would say, fundamental things that in the banking system we need to be sorted out.
Okay. Now, Nguyen, we kind of just discussed what can go wrong, but I think your longer-term view on the banking sector overall is quite positive. So could you maybe explain why and go to the slides?
Thanks. Actually, I prepared several slides for this part, but I think that most of it is already mentioned during the consumer sessions already. I would like to mention very shortly about the guidance of the government to support the banking sector, along with the guidance to increase the bank penetration rate from 56% currently to 80% by 2030. And we also, the banking sector also benefit from other demographic shifts like the rising consumer class and smaller household, and the change in the consumer behavior, like they are becoming, prefer to use online much more than before. They're increasingly willing to borrow and also use more financial service, just like Anh Hải has just mentioned. And also, we still have a lot of room to increase our household lending and other services, non-credit services like credit card, insurance, and that is all of the long-term outlook for the banking sector. But I would also would like to follow up with two suggestions for the banks. First is that because they are serving a highly dynamic and highly competitive segment of the consumer, and if they want to compete on that segment, they need to build up their ability to innovate very fast and also strengthen their risk management process so that they will be able to catch up with the need of their customer. And the second important thing that I would like to suggest is that to make your business become more sustainable, you also need to, like I said, raise the standard of the market. This is to protect the right of the customer, because this is also one of the social factor that we're considering in the ESG assessment of a bank. If they prioritize the interest and the right of the customer, they need to protect the well-being and financial being of the customer. And in other words, they need to provide their service in a responsible manner, and this will have to harmonize the interest of their customer and the shareholder. And this would create a more sustainable business of the banking sector in the future, especially when they have the power to serve the rising consumer class of the country. And this, you have anything to add on to share with them?
No, I said the same view as well. Yeah.
So I'll ask one more question here, which is, there was an interview I saw with the CEO of Netflix, and they asked him who his competition was. You know, is it cable TV? Huh?
Sleep.
Yeah, but that's exactly right. Yeah. Stealing my joke, but thanks. That's fine. That's fine. Yeah. And so they asked him, is your competition? Is it cable TV? Is it other streaming players? And he said his competition is sleep. You know, so Netflix, there's not enough time in the day. Their competition isn't other players. It's interesting to hear you as kind of one of the smaller banks. Is your competition the bigger banks? Is it the e-wallet? So as you talk about digitalization and API, is the competition yourself? You know, because I think it's really about execution, being the best that you could be, not what everybody else is doing. How do you think about answering the question, and then how do you articulate that to the board and to your staff?
So I think obviously 5 or 10 years ago, people talk a lot about fintech, and I spoke with one of the gentlemen from Timor. Right? I think right now, if you look at everybody are trying to build their own tech platform as well, and I would say pretty advanced, right, in the market. And yes, in the past you have like e-wallet that people, if you want to pay, then e-wallet will be the way to go, right? But now almost everybody have an app that make it very convenient for you to pay. You don't need to go to Momo for make payment, for example, right? So that's one area. But second area, I can see that for us as a mid-tier bank, right, I think there's still huge growth opportunity for us at the moment, and not by competing with others. I think the market still has a lot of untapped potential. For example, right, the way I look at banking is that if you can embed banking in your customer daily activity, not because they need to do banking, they have to go to your banking app, But let's say if they're interfacing, let's say with Shopee, for example, if they want to buy something, right, you are there invisible behind, right? If they want to buy something and they say, sorry, it's too expensive, I don't have money to pay for that, right? If your buying is there, right? So embed your buying in the life of your customer, then it creates a huge opportunity for the market, not only for OCB, but for every player, right? I'll give you another example. So a lot of companies in Vietnam now using accounting software, MISA, for example, right? If you can embed your buying solution in that accounting software, so then when customers say, look, now, I need financing, instead of thinking about which buying to go, right, your buying is there, right, in front of embed in that accounting software. So again, that's how you embed banking in the daily activity of your client. We're creating a huge upside. The demand is still there, just to be served, right, by somebody in the market.
Thank you. Okay. We still have about 5 minutes left that we can or don't have to take. Are there any questions from the audience? Ken? Yeah. Anybody except for you. Hold on 1 second. Grab a microphone. That's a camera.
Without going into too much detail, there were a couple of banking failures, or should I say, supervision or inspection failures. So last year. So in terms of your conversations with the state bank, are you satisfied that actions have been taken to ensure that we don't have such failures going forward? Because as an investor, that's pretty important.
Sure. Is it for Thuy?
Anybody who's brave enough to answer it.
How's this? Ready? Thuy, how would you like to answer that question?
We also have an impression. One of our key takeaway from the trip is that even though this year's priority will be pushing the economic growth and ensuring the stability of the system. Maybe the anti-corruption campaigns can continue, but the priority is still economic growth. And in that sense, we understand that with the effectiveness of the new credit institutional law, and also the new land law, we can expect that the policymaker would be now setting everything up to control the sector closely with these new laws. And we can expect that they would keep watching the sector for a while before assessing the impact of the law and assessing any of the case and taking any of the other actions.
So I'll ask a follow-up. Yeah. So part of the thing with SCB was it wasn't publicly listed, so there was less transparency, even though it was actually quite a large bank. Do you see the State Bank of Vietnam now applying the same type of supervision to privately held financial institutions as they do for publicly held institutions?
If I could chip in, right? So I think after SCB incident, and to be honest, 10 years ago, we spoke to SCB about SCB already. We said it will blow up, right? If you can buy the 3 week bank, you become a much bigger weak bank, right? Yeah. Bad bank, right? So we talked about that already, right? So it's well known in the market. But I would say that today, I think that the level of scrutiny is much stronger. So for example, own the private bank in the market, receive the inquiry from the regulator and asking the bank to respond to own the related party lending at the moment. And they know exactly who are you lending to. Even though on paper it said that, it might be customer A, customer B, but say, own a link together. Either based on the same collateral or based on the same cash flow, right? So they know exactly. I think they are very concerned that if they tighten or they put on the brake today, right, the whole market will collapse. Because there's no money flowing back into the real estate sector, and the whole sector will collapse. And so that's why I would say that they are gradually tighten the grip on that. Yes.
No, but where I was trying to get to, and you've answered it in part, but from an inspection point of view, we need strong governance within the banks, and we need strong control or inspection from the state bank. And it was the inspection that let the whole thing down with SCB in many ways. I mean, it brought it to a head. But so do you think going forward there's going to be stronger mechanism for inspection of banks to make sure what they're reporting is actually correct?
Yeah, I think inspection is one solution, but it's not not a solution for everything, right? If you look at the scale of the inspection team SV today, right, I can bet with you that they are always late in the game, because banks keep opening new branches, growing bigger, right? And for the SV to inspect bank, normally it takes them 5 years to go back to the same bank, and 5 years too late. So again, I think the remote supervision is very important, that you need to wait for 5 years to understand what's happening in the bank. There's a mechanism for them to collect data at the moment, right? So how they analyze the data to identify more on the risk-based approach. They said that, look, bank A is a big problem today, right? I need to come in and inspect them. So that's happening today. They are trying to build that team. But another challenge is that if you look at how SCBK is happening, many SPV officers has been put into jail already. So people are super scared today. And it's very hard for a central bank to attract talent. Because say, look, in the past, if you go work for the government, you think you are safe, right? Today, you are no longer safe, right? So again, it's not an easy problem to be solved at the moment. I think they are trying to find solution, but it's not easy.
Well, I'm getting the time is up line from the television. So Hi and Thuy, thank you so much. And if there's additional questions, just let us know. Thank you.
Thank you.